Welcome to another Sunday breakdown. It's your boy Drewize Banks, and this week I'm actually going to be covering a couple forex pairs. This week I'm going to be covering GJ, AU, Gold, US 30, and UJ. So get ready, get your seats, get your popcorn. It's about to go down. Let's jump into it. All right, so here we are on GJ, and we're actually going to start from the monthly time frame. Monthly time frame is the highest time frame possible, and I like to kind of be on this time frame so I'm aware of my main details. You can actually see I already had some drawings here. The only thing I did was add this demand zone right here, which was supply but turned into demand over here. You can also see that I have my market structure drawn from swing low to swing high, actually drawing the market structure movements. Now, I want to make it very clear that specifically right here, we were in some type of a downtrend specifically, right? And it was this right here that this lower low was made, right? Then we came down even low. We came back up and made a lower high, boom, and then we pulled back and shot up. So automatically off the rip, it was this area right here that got broken by structure, as you can see, right? This area right here that got broken specifically. So what I like to do is I like to add a red eclipse on the lower highs that got broken. So that way I'm able to kind of keep myself engaged, right? So with that being said, it was this candlestick right here that obviously made the low, but it was this one that came right after the push up. So we're going to start right here. Instantly right here to right here, you can see that we got a 23.6. And with the 23.6, you know that it either stands for consolidation or trend continuation. We can see that we did consolidate, which we have to go ahead and bring it up to the next higher high. Boom. At this moment in time, we retested 23.6. As you can see, clear and mighty right here. We retested 23.6, but after that, we made a new higher high. Boom. So now we have to where we are on the overall picture, on the overall trend, right? To me, market structure really isn't broken until this lower high right here gets broken. But who the hell is going to wait to go back to 135 to take a sell when we have all this potential, right? But just keep in mind that on the monthly, we're in an overall uptrend. Weekly, we can see where we are. Now, it's this little bit of itty bitty of detail that makes the biggest difference in my retrospect. So the fibs were clear as day. That it was this same area that got broken by structure, which we're all okay with, right? But keep in mind, every time frame, the candlesticks are different. So what do we need to do? We need to kind of bring it back down, and we need to make sure that we're reevaluating, right? Now, the reason why I want to say bring it back down is the fibs and everything should all say the same thing, but one of these time frames is actually going to say something different, right? And you'll see what I mean by that. So we're now on the weekly time frame, right? And obviously we pushed up from this area right here. Well, my head's covering it, but this area right here where I started the fib, we're pushing up, and we can see instantly that we have a higher high right here, right? Pull back, we hit 23.6. So we have no fib to kind of extend. Keep in mind, 100% only gets extended when you have a higher low. So now, boom, we drag it to right here. Once we get to this high, we actually make a 38.2 right here. So because 38.2 is a market structure level, I'm going to go ahead and fill this bad boy in with green. Right? It's a market structure level. And then after that, you can see that we pushed up. We made a high because it wasn't higher than this one, but then we pushed. So instantly, right? Instantly, I can go ahead and change the perspective. Right? What that means is we went ahead and back tested all this data over here just to understand that this was the last market structure level that it made throughout this overall trend. So what's next, right? What we're going to do next is we're going to drag it from here to here. Reason being is because we understand that we're in a bit of a range right here where we have a resistance level, which I'm about to drop real quickly. We have 158 flat, but I want to get the most common one that all of them touch, which I believe is 157 flat, which I'll drop right there just for now. If it's green, it's clean. That's my retrospect. So let me go ahead and delete that. Let me add that. Now with this major QP, you can see that it was a solid resistance in this overall area, but then we did use it to break it. So why did I put this right here? Because what's used as resistance is going to turn into support, right? But before we get over there, this was the overall resistance in the area. So we pushed up, we made a high, we pulled back, we tried to settle on 38.2, we pushed up, we did not have enough momentum to break right here, right? But then we pulled back to a 61.8. So my question to y'all guys is, a 61.8 a market structure level? Yes, it is. The reason why it's a higher low though for me is because it was maintained. It's higher than this previous low, but then we pushed up and we made a continuance of market structure after that. So what I want to now do is I want to adapt my market structure to this time frame, just because we're putting in a lot of work on this time frame. I don't want the data to go, unnoticed. So give me a second. Let me drop that over there. There we go. Full screen, looking clean. All right, boom. So we draw a market structure, and we're now aware of where we are within current price, right? Pull back, shoot up, came back, boom, boom, boom. I know what you guys are thinking once y'all see this. Just wait, I'm gonna explain the whole thing, right? So remove this, and boom. Now from this push up, right? Obviously we dropped from wick to wick. We settled on a 61.8. Tested, should I say, a 61.8, but settled on 50%. 50% to me is a market structure level, and it's very clean how we're getting all this clean market structure movement, right? But then after we failed to obviously make a higher high, right? Resulting in the overall pullback, right? So when we pull back, the wick came as low as right here to retest this current zone that we have like around here. If I draw from left to right, you can see right around here, price overall came to retest this area on this time frame, right? And I'll drag it out and I'll show y'all. The reason being why price came back to retest over here is during this downtrend, you ever heard the saying how you have to look from left to right? Well, when looking from left to right, price obviously made some type of a lower high over here before we kind of, broke back up to the upside or whatever the case may be. But it was this lower high with the most touches that it came back to retest. So that's what it means to look from left to right, right? And you can see that at a minuscule, this is our overall resistance at, looks like about 150. So we got like a 700 pip range roughly from our resistance to our support, right? But this was obviously the last year's support. But more of it is, I backtracked to the weekly to show y'all that the way how we read candles when we draw our fibs is we read it based on where the body of price settles at. It's very key because wicks can test the area, but wicks are only how we draw it. We read candles based on where the body of price settles at. And in this scenario, the body of price settled on 70.50. Hence why we did such the aggressive continuation back in the direction of trend. Keep in mind, this is all news oriented. So you guys know how news works. If news adjusts the market to come down, momentum is going to pick back up and correct the market. It's like a clock. It always corrects itself. So given between here, this higher low right here, don't get me wrong, it was right within that moment of us trading. But as far as for maintaining the trend, no. So I'm going to remove that one. And it's pretty solid looking at this. And now I'm going to go back to the daily time frame and I'm going to look. You can see how we weeded out a lot of the data. And now we should be continuing from this perspective from our previous market structure area. Now, if I look at the weekly, of course, I'm going to draw our fib again from swing low wick to swing high wick. We could see where we tested this overall resistance area. Support area, right? But when we go down to the daily, there's a lot more structure. There's a lot more detail. There's a lot more things that's going on. So what I want to do, since we're now caught up to where we are market structure-wise, I want to delete the past because the past is the past. We kind of understand how we got here. And now I want to pick up from here and I just want to draw solely just the market structure so I can kind of get an understanding of what we're seeing and what's going on. You could see that we got a lot of consolidation that happened within this area right here. We finally failed, broke down, pulled back up, broke down, pulled back up. So I know how this may look, right? I know how the perspective may look of overall. Overall, the perception overall is that we're in a downtrend just because we broke this area right here, right? Obviously, we dropped down, selling free, blah, 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 blah. Well, overall, the fib state that we're still in an uptrend. So what I'm going to do is I'm going to put in the work, right? Because obviously the lower time frame shouldn't agree with that bias. I'm going to put in the work. I'm going to right click. We're going to go to settings. We're going to go to visibility. We're going to turn on, we're going to turn these off. So that way anything below the daily, I have to put in the work and see. Now, obviously, we're going to start from right around here. We can see we got some pretty solid candlesticks right around here. Drivers pullback. Well, 38.2 was respected. You guys know how I feel about a 38.2. It's market structure, so we're going to add an eclipse right there, and we're going to keep it going, right? Keeping it going. Another fib from here to here. See that we did not touch any 38.2 right here. We actually tested 23.6. But another thing I want y'all to show you as well, that within this controlled range, that we actually retested right around here. So I'm going to make this area green as well, just so y'all guys are paying attention that it was this push up. We retested, boom. So we're actually moving via market structure. Boom, let's drag that up a little bit more. So then this is where it gets litty. It gets litty right here because we push up, we came, we pull back, we push up, we came, pull back, boom, right? So right around here, 50% is a market structure level, but from here on out, we failed to actually continue making a higher high. And then this is where the trend trains really, really happened, right around here, right? You can see that we dropped. So from right here, we broke 50%. We didn't break the previous high low, but now we have some speculations that we may be entering a downtrend, right? So what are we going to do? We're going to draw our fibs down going this way. We can see that throughout this whole controlled area from wick to wick, right? Literally from, make sure from this wick to this wick, we can see that price came, right? We dropped, boom. We came, boom, we dropped. So give and take in this overall defined range that we were in, we were consolidating, right? Now, if I was supposed to draw a perspective from here to here, back on the bigger time frame, because the whole point of consolidation is to trick you on what you see, right? No one likes to get tricked at what they see. No one likes those challenges in trading whatsoever, right? But let's say I backtrack to this time frame where we can see the 23.6 playing its role, playing its part. But keep in mind the wick is from right there, right? But if I go to the 12-hour, well, we have a little bit more control to draw this in this area. Hence how I had it before from here to right here. And you can see really and truly, by drawing it from here to here, boom, but then we draw it from here to here, we could see that we did go ahead and still respect, but then boom, we dropped and we ended up breaking structure. We ended up breaking structure just because we printed lower than our previous higher low, which for me on this 12-hour signifies that the 12 hours in a downtrend, right? Now, I know the funniest question is, okay, where? So we know that fib-wise, we could draw it from here to here to get this. So let's go ahead and look at the most obvious perspective first for this downtrend, right? Let's look at this, because this is the reality that we're in right now, which is 23.6. Somewhere when I go lower, there's going to be enough detail to where I can adjust my fibs, right? Now, keep in mind, this is the low that we needed to base our criteria, but we really needed to break this low, right? So what I'm looking for is I'm looking for a time frame that's going to have the itty bitty structure in between this, so I can see what ended up causing the break. So you can see on this time frame, I have a little bit of juicy data. Now, peep this, right? Obviously, I have the green from the higher time frame, so I know my overall trend, which I'm not trying to confuse myself. I'm not trying to shake myself. But obviously, on this time frame here, I have a little bit more detail, right? So the color is green. Just give me a second. I am going to change it because it was this drop that obviously altered the overall trend whatsoever. I feel like it's that we need to kind of focus on. So I'll change the color to, let's see, no, I don't like it, white. All right, so boom. Obviously, we broke minor structure right here, which is important. We broke this minor structure. Boom, making this a real lower low, making this a real lower high. Y'all guys know that we need a lower high to draw our downtrend fibs. Drawing it from here to here. You can see that instantly on this drop from wick to wick, right? What wick are we using first? Let me see. Using this wick right here, meaning boom. So boom, let's go down a little bit lower. Nothing changes, boom. Nothing changes, boom. So now we can see from this drop, boom, 23.6, which is not a market structure level, boom, 38.2 looks like it was tested. Where may you be asking? Right here. So what that means now is one of these time frames from the 4 hour to the 1 hour is going to show me a clear touch of that 38.2. That's what I'm looking for next. Nothing. Oh, we're getting close. It would be my good old friend, the 1 hour. So what that means is that the 1 hour is the lowest time frame that you can base your overall analysis with this overall bias, right? So obviously, let's go ahead and weed it off, right? We're dropping Eclipse right here because that's actually a lower high that we're basing our fib off of. Fill it in red. And we got another 38.2 right here, which we can fill it in red, right? Y'all guys know that it looks like we have what's called a point A and a point B. We can now draw a trend line to make it make sense. And you can see, boom, right? This is all 1 hour based, right? Right? So, again, picking up where I left off, you can see the trend line. You can see we have a point A and point B. You can see the touches. Obviously, you can see we broke the trend line, and et cetera, et cetera. Let's backtrack for a minute. Let's backtrack for a minute. The point of us backtracking is to make sure that we're still in alignment with the higher time frame structure, right? Cool, let's go back to the 1 hour. So now that we're on the 1 hour time frame, you can obviously tell that this is some type of a lower high. And now the data before, none of this other stuff matters. We can see the bigger time frame trend. We can see the data that we use to kind of get here. So we no longer need this. We're going to delete this. And we're just going to solely focus on this perspective, right? Now, looking at this, I want to go ahead and draw out market structure so that way I don't think about it. I just go off of what I see. So we can see right here, boom, we broke this, we pull back. Let me see, okay, we broke right here, we pull back, we broke right here, we pull back. Okay, got a little action right here, drop down low. Let me see, drop down low, bing, 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 bing. So now we got a little bit of action, right? So it's our job from here to here to kind of make sure that we know where we are. So from here to here, you can see we got 2 or more candles going in the opposite direction of trend. What we're doing right now is we're just trying to make sure that the break of structure makes sense. Now, you can see that we got that chunk of red right there. We got that pullback followed by into that 38.2. Bing, bong, boom. Let me see. Okay. Let me just see. 23. So let me see. Oh, yeah. At the time, this was 23. At the time, this was 23. At the time, that was 23. At the time, that was 23. And bing. So now watch this. Obviously, we drag our overall fib right down here. And this is the sweet part. Obviously, we came into a, keep in mind, monthly, we came back into a monthly zone, which is going to be strong as shit, right? So, boom, we came crashing into it. So, what do y'all expect next, right? Obviously, we have all these little minor time frames that are maintaining the structure. You can see over here, support, resistance, boom, then this is the next support. This should have been the next resistance. Then, boom, we consolidated, right? We did exactly what we need to do at the 23.6. Now, oops, let me drop that back. This is the part that I want y'all to pay attention to because this is where it gets a little juicy, right? Keep in mind, it was this push up that allowed us to break overall structure. What do you ask me consider a break? anywhere where there's a 38.2, once we break past that, we're now changing back trends. We consolidated to 23.6. So if you want to safely wait past 38.2, you could have, right? So now in my retrospect, even though that this is the previous lower high, right? The previous lower high is all the way up here. This is just where I have a zone, right? So what does that mean? That means that I can backtrack to a higher time frame. And what I'm looking for, ultimately, is I'm looking to kind of draw a zone from body to wick somewhere like around here, right? The reason being is because this is going to be our newly found resistance, right? Support, resistance, last lower high. You got to make it make sense, right? Just for right now. Obviously, going back to the 1 hour, it was this push up right here that allows us to change trends drastically, dragging it from here to here. We can see 38.2. So now it looks like whatever caused the drop has stopped fully, which looks like news. I don't know if you guys heard that news. But yeah, news caused us to kind of do that. Now, this is the best part I like. We hit 38.2. We came test to 23.6. We came retest 23.6 again, and then we pushed up. If we don't want to look at all of that, we can change the time frame from this and see where it was last maintained as a 38.2, right? So looking at it from this perspective, I want to say it's the 2 hour. It's a 2 hour that makes the most sense in this scenario, right? Now, what makes a structure, right, is not only higher lows being maintained, but also the higher high that we get from it. So ultimately, when we start our fib, we could see the buildup, obviously, that happened right here, where price kind of settled on here as well. And then it was this kind of retest that kind of pushed up. So if we were supposed to just draw this area alone, this is what we would see. This is what we would see. God damn it, where is it at? There we go. So boom, right? Bing, bong, boom, bing, bong, boom, bing, right? So pay attention, because now we have the lowest market structure level. In all reality, if we go to a higher time frame, we're going to see that we got retest, drop, pullback, whatever the case may be. Change the time frame, boom, change the time. One of these time frames is going to agree with our bias, and that's what we're looking for. So now, pay attention, right? Obviously, from this low to this high, it's all a big structurized movement, right? Because obviously we didn't break, but we broke minor structure to make major structure. So too far up, but you can see that 38.2 was respected right here, and boom. All right. So my retrospect is that from right here to right here, this is the next fib level, because that one was based off of market structure. Deleting that. From this 38.2 was a build up, and then boom. So once we came crashing past not only this 38.2 that we broke, whatever the perspective may be, even if you use this one right here, we still broke a 38.2 area. This is the main thing, right? At areas that we make some type of defined higher high, we should be able to use this area as a retest and then a continuation. We failed that completely, changing all the overall trend, right? So now we get to where we are now, which is basically here. Here, right? Now let's go down to the 1 hour, because we want to make it make sense. Now keep in mind, we have to drop down and break this in order for it to make sense. So before we get carried away, let's just look at this area right here. And the reason being is why I said to look at this area is because we have 2 or more candles going in the opposite direction of trend right around here. Let's go to the 45 minute. Let's see if the 45 minute gives us a little bit more of detail. It doesn't backtrack to the 1 hour. This area is still the same, so nah. So we drop as low as all the way down here. So keep in mind that when you see this, we barely got any retests to any of the structurized points that we broke. We actually just broke back into an area of support. So what that makes me fees to believe that this is all news oriented as well. So why do I point that out? I feel like there's a correction coming, but peep this, right? Let's go back to the daily. If you look at the daily overall, Where 0% is where we have the 70.50, and they're both making support right here. Keep in mind that over here is where buyers previously took over. If you pay attention to my little engulfing trick right here, where I draw this little white line, right? That's the lowest that price should come down to in this defined range. You can see that perfectly. We ended up, and I want you to look on what I'm basing these factors off of. From the open of this candle, I drag it off where buyers recently engulfed at, right? You can see that it's actually acting as support here and as support here with our 0% and with our 70.50. So what does that cause me to believe? That we are experiencing the news pains right now, but we retest, to come back to a monthly support. But I feel like this 70.50 is going to be our key. So why am I focusing on that 70.50? The same reason, right? Let's go down to the 20-minute, for example. We can see structure. We can see that structure wasn't even retesting here, right? No support or resistance. But where would structure make the most sense in its overall defined range? Right here. You can see that not only did we make support right around here at the 750, right? We made controlled support, but we actually was able to push up to the next major QP right around here, break, and now we're doing retest. So what am I looking for this week specifically? Obviously, we broke some type of lower time frame construct. We would need price to kind of abide by the same laws that it broke to make sure that we're in the same trending conditions. So let's backtrack to like the 10-minute real quick. We can see that it was this break from here to here. If I go to the 15-minute, it would be the same area. From right here to right here is where it actually caused us to break this defined range. And I see a little bit of a story being told on this lower time frame. So I'm seeing some confluence that could happen here near the 250, which I'll drop right around here, oops, wrong tool, right around here, boom, right? So this is what I'm waiting for. I'm waiting for, obviously, market to open, price to make its pullback, and for us to see. Now, price can come as low as to right here because this is where the last bullish candle was and seller's candle. So you can see that this one opened and this one opened and it took over, but then buyers took back over right here, and then boom, boom, right around here on the lower time frame. I can guarantee that there's a retest that needs to be happened before price continues, or price can continue based off of any of these movements over here. It's not until as low as the 7-minute that we kind of broke this minor structure right here, but let's just wait and see. So I'm back in a bull run because on a daily time frame, both that sell move and that buy move both ended up at 70.50, which was overall support. And I'm not selling until we break this. So I'd have to sell at like around 154.850 is when I'd clearly sell, because we would have broke under this and it would be good to take that drop away. But I don't see that happening. Anything can happen, but I don't see that happening. So let's just see what the market gives us. That is for GJ. Let's go on to AU. All right, AU/USD. Let's backtrack all the way to the daily time frame. You guys can see I got a little bit of gems already on here, but let's remove all drawings, right? Clear as day. I want to start from the monthly time frame. We can see that AU is back to the all-time, I won't say all-time lows, but it's back at a previous area of support, right? The reason being why I'm going to start with support on this overall area is because tested candle, push up, boom, you can see the engulfing. So I feel like we're going to push up, right? There's no zones that are meant to be drawn yet, so let's just go to the weekly time frame. We can see obviously that we pushed up, whatever we maintained, we came back down, and now we're pushing back up. Obviously, this is a strong area of support. We go to the daily time frame, and it's a daily time frame for me that makes the buy solver more sweeter. We can see here where we have a clear as day downtrend continuance that is happening with this particular pair to where we drop, right? We came as low as down here, boom, boom, and then we broke, and then we made our transition. Since the transition started from right around here with this low point, this was the lower low, this was a low, we pushed up, we broke, boom. We can see that if we draw our moves adequately from wick to wick, we can see, let me make sure, this is on the wick, this is on the wick, this is on the wick. We can see that price really and truly looked like it respected 38.2 right here. So I'll give it to it, right? 38.2 was respected. It is a market structure level. I also want you to look from left to right here, because we do have a bit of technicalities that we can go ahead and bring to the front of the congregation, right? When I say that, we have a zone right here that ultimately was respected with this defined range right around here, right? We didn't make it as low as the retest, but price found structure at this 38.2. And if you look, price actually found structure at a QP V166 flat, making us know that this area overall was respected by price, right? So I know the next question is, Drew, what comes next? We delete our fibs, and what I want to continue is I want to draw structure, because if we draw structure, we don't have to think about it. We just react off of it, right? Boom, we pull back. Boom, we moved as high as here. Boom, we pull back to here. Boom, we pull back to here. Boom, we pull back as low as here. Boom, we pull back to here, and etc. So it looks like we have a bit of a, I want to say, defined range in this overall area, right? Because if you look, it wasn't higher than this one, but we were maintaining, right? Still, it found structure, push up, boom, boom, boom. We kind of drop that back. Now from this defined range right here, 61.8 respected. This is the last market structure area, right? Now, if you look at this, look at the overall support within this area. This overall support within this area is the 167 flat. When you look at it from a higher time frame basis, no candle broke underneath this and fell, which means that overall, when I move my fib up to this high point, that means that this 61.8 was overall respected in this overall bias, yes. Basing it from here to here. We did maintain, however, but if I backtrack to the weekly, you can see that buyers went up, sellers came back down. Go back down to the daily, we can see that we do have other market structures that did validate their point, right? But this was the one that made its original higher low. Higher lows are just being maintained, which I feel like you could have went ahead and used a trend line to guide you in this overall, with your point A, your point B, your point C touch, right? Obviously, this trend line can be adapted a little bit more better. Something along the lines of that. Obviously, when it broke, boom, it would have been time to exit or whatever the case may be, but we made some type of area of support right here, which is key to me, right? Now, this is the part where it gets a little interesting. It's not this. Obviously, we made a higher low here and we pushed up, making a new high, which is important because all these are new highs functionality-wise, but this one was the same, and then this one was the same, right? But then we pulled back here. So I feel like because this one was the previous market structure level as well, because we did push up a little bit higher than this one, we can move it up to right here, which I want y'all to pay attention, right? To wake everything like that. So when we did make this new structurized movement within this area, we did push up, come back down, 78.6, pushed up, made a new one, right? And all these areas you're keeping track of because it's previous higher low points. Now, if you look right here, we did go as low as the half point QP, but the biggest thing is that from this area right here, which we actually made some type of structure, we never actually broke this area. And the reason why I say we never actually broke this area is because there is a zone that's meant to be drawn from body to wick right around here at this previous market structure level. And you can see where price to the left actually held its place. So because price kind of held its place at this defined area, this area overall, it's the same market structure area that kind of held its positioning from right here. So what does that mean? That means that you can use the swing low wick to this swing high right here. You can see that we got a 50%. I'm pretty sure if I was supposed to change time frames to like a 10 hour, for example, and I draw my fibs from right here, you could see actually the build up. That's how kind of AU works, but you can see where this zone really played its part and is acting as overall support from this previous higher low right here. And every time we came back under, price came back right back above, right? So looking at it from the perspective, let's go down a little bit lower so we can understand the details that we're looking at here, because what we're looking from here is the transition. The transition, one of these time frames is going to have a beautiful transition where we go from a downtrend back to an uptrend. And that transition that we're looking for is actually going to be on this time frame right here. You can see where we have a bit of market structure, lower high, boom, lower high, boom, lower high, boom, boom. It was this pullback that kind of came and changed the whole game for us right here. Now, let's backtrack to the 3-minute real quick. We want to just find the common lows, which is right around here. And you can see that this zone is actually doing its part. So what does that mean? That means that it was this push-up that overall broke this structure. And you can see that we have a little minor structure here. So literally drawing from wick to wick, we could see where price kind of makes these steep retracements to the 78.6, finding structure at these price points and solidifying itself, which is very good. All right. So what are we going to do? We're going to cross that out and we're going to stay focused on the game, right? So from here to here, we could see the detail that we're looking for, which 38.2. Boom. We actually did make a new higher high from right here. So we got to kind of pay attention, right? Boom. Now, this is where it gets a little funky, I want to say, because we're going to have a little bit of a transition. But it's not the transition that I want you to pay attention to, because obviously we went down low. But if we go from the 4 hour, from this defined area right here, you can see that we have a zone over here from body to wick, right? And when I draw the zone from body to wick, we actually came back and we're retesting right here. So despite you looking for the breaks of structure to kind of contradict price, you also got to make sure that this is just one tool, that you have multiple that kind of make it happen. So don't forget about zones, don't forget about your trend lines, don't forget about things like that. And don't forget that the higher the time frame, the stronger the data. You can now see that on this time frame, it's a totally different perspective from here to here, which is why you always want to flip through your time frames and just make it make sense. Because on that lower time frame where it's telling you to worry about here, you should have really been worried about right here, right? And this is why we flip. This is why we do what we do. So you can see on this beautiful time frame, we had a 50%. So I'm going to go ahead and borrow this because it's on a higher time frame. Oops, nope, not that. Because it's on a higher time frame, the relevance of the data is a bit stronger. So I'm going to go ahead and worry about this. Now, this is where, again, where we get a little interesting again. It's because these pullbacks become a little bit more steep. So when they're this steep, I'm just paying attention to the overall support and resistance. You can see that even though we came and printed down a little bit lower, that from this overall price point, wick may have came down lower to try to dictate what we see, but that's why you want to go higher. This was the last market structure area that we made with 2 or more candles, which is why I came back to this 8 hour time frame, which means that none of these pullbacks really matter until we made the pullback on this time frame that did matter. And at that time, we would have got a golden zone retest. So you can see that throughout this this zone really played its part really, really good, right? So what does that mean? That means that 50% was respected as a market structural area. So again, I could go ahead and take a new one, but I'm just going to borrow from what I have and drop that right there. You could see that once we kind of pushed out of this defined steep retest area, that still this zone overall was still being used even later on. So what that means to me is that you want to use supply and demand zones, especially when you're trading AU, to make it make sense off these steep retraces. We could see that the body of price came and settled at 78.6. 78.6 to me is a market structure level. So what I'm going to do next is add this beautiful eclipse right there. And yeah, I know what comes next. New fib time, baby. Now, when it comes to wicks, you always want to base your fib from swing low wick, so that way you can account for the candles on the lower time frame. And we're just going to drop it up here to the highest candle within this overall defined area. When we go ahead and do so, you can see that on this time frame and on this perspective, right, from this swing low to this swing high, trying to drag it across. Here we go. You can see that price came and tested 38.2 but settled on 23.6, which stands for trend continuation. So what does that mean? You are essentially supposed to drag your fib up like this. Now you can see that 23.6 is being reacted off of again, but what I want to point out is the importance of the detail, right? Right here, a zone is respected. Right here, a zone should be respected. So we have some rules of supply and demand that are going to kind of save us. Let's change their perspective. We go to a 10-hour time frame. Now this is where it gets beautiful. Obviously from wick to wick, let's kind of backtrack it a little bit. You can see still the perspective has not been changed on this time frame. So going higher isn't the goal, going lower is the goal to see what time frame was respected with that 38.2. We're getting a lot of wicks, Oh, boom. So it was this time frame right here where 38.2 was respected, which is a 3 hour. So you can go as low as the 3 hour to base your analysis on this overall defined area. So now looking at where we are now, you can boom and boom. Now, when we do this, we have a new fib that we could draw from here to here. And boom. You can see right here that this actual zone is actually being respected with this overall structure right now. So what does that mean for me? I say that AUUSD is in a beautiful uptrend. We actually just came and respected this zone, this QP, and actually the QP that I'm talking in reference to is the 170, no, I'm sorry, the 169,500. Right around here. That QP was respected by price, resistance turned into support. You can see that momentum. If we go as low as the 1 hour, we can see where buyers actually came into this defined range and took over, which is all that matters. Buyers took over as low as here, and we can see that they retest the zone and they shot up, and now we're back at an area of resistance. Hopefully we have enough momentum to break this area this week. So this is the fib that we're using based off the 3 hour. You can see the time frames, you can see the momentum, you can see the structure. That's that. Going on to Goldie. Jesus. Yeah. Gold is on savage timing. I'm going to remove all drawings and I'm going to look at the overall time frame. I can see right here that we got something being respected right here. So let's see. Obviously from right here, we can see with this defined range that boom, this was a certain high point, right? And with this high point right here, this area was broken, never came back for a retest. But we made a quick one, and then we pulled back. So following our basis from this quick one right here, we can see overall where we are. We can see that 50% came and was respected right here. Let's change the perspective and see if we see any more of these beautiful details. Obviously, we're rejecting hard right here for some reason. You can see all these wicks are the same. They're the same for a reason. Obviously, somewhere over here within this defined range is where price is trying to make these details. Now, we did start as low as right here, which I'm glad that when we draw our fibs, you guys can see the perspective, but now we gotta make it make sense, right? Now, to make it make sense, obviously what we're gonna need to do is we're gonna need to come back and we're gonna need to back test a little bit, right? We can see, okay. We can see, okay, so this pullback came as low as 38.2. So what I wanna do is I wanna put it to this wick right here. Boom, right? So let's see, 23.6. All right. So now we understand where we are, right? Now, still, there's something that's symmetrical about this area right here, but we'll find out later. You can see that we have failed on this time frame. So really, the weekly and the daily are great perspectives to really look at this chart from. Now, because we're in consolidation, obviously, sell at resistance, buy at support. We can instantly see that right around here where we have some type of area 2 that we broke this area. I'm only now going to be concerned with this defined range from the daily time frame from right here to right here, right? What I want to go ahead and do next is, y'all know, draw this structure to make everything make sense. Because you got a little pullback right there. Came, bing, bong, boom, came back. And what I'm doing is I'm just drawing out all the details as normal because I'm trying to make this make sense to me. Defined range right here, we broke. We never came back for that retest. Yeah, I can see that gold likes to say fuck the retests and fly. So what does that mean to me? Obviously, we had a break of multiple structures with this push up right here. What we're going to do is we're going to base our fib from right here. So now we know where we are. We can see that 23.6. That's all the shit has been moving off of. So because we have that data, we still want to use our zones to make this area make more sense. We can see that we have anywhere where we made a new peak, we're actually using these areas to come back for a retest, push up, retest. We did push up right here. We did come for a retest, but there's something going on in between right here that caused this to come back for a retest. So we did push up to this area right here. Boom, retest this zone. Obviously, this is zone, push back right here, broke above, retested, and kept on going along, right? So obviously, there's some defined detail within this overall area of structure. We need to go lower and make it make sense. You can see that these zones and the structure and everything's holding on quite beautifully from left to right. Obviously, boom, we can see we got another little zone right around here. I'll add that. And we just want to make sure that the details make sense, right? So obviously, with with this 11-hour time frame, we can see that we got this defined push up from right here. Now, what I'm looking for right here is the real higher low that made everything made sense. Obviously, we pushed up from here to here. And we hit a 23.6, but I want to go low enough to where I can see more details. Why am I trying to go low to see more details? Gold is a pair that's very volatile, and you got to make it make sense. So you have to use the lower details, the lower on structure, to overall make this make sense as far as for details go. And I personally feel like with this particular pair, you got to make it make sense. It looks like there was a lot of 23.6 movements. I'm going to go as low as the 5 hour just to make it make sense. 23, okay, good. So when we came back right here, we did do a big push up, but we came back to retest here, obviously with an area of support. And we did go ahead and get this little movement right here. Overall, 23.6. Let's backtrack a little bit to the 10 hour. Just want to make sure that there's nothing that I'm missing. Going back to the daily. You can see that all these time frames from the daily to the 1 hour, they all say the same defined shit, right? That it's all 23, all 23. So give and take that you're moving on that low of a lower time frame structure, you really got to make sure that you read out your lower highs properly so you can move your 0% up, because that's what's going to matter. So we can see that boom, boom, boom. It was this push up that broke the structure. Let's see if it's the same story. It was this push up that broke that structure. God damn. Do we have nothing? Oh, we got a little bit of detail to use. Oh, nope, I lied. 1 hour. Let me see, pull back. Okay, so we could bring this up a little bit higher. And this obviously changes the overall game for us. That little adjustment that we did, now we just got to recalibrate ourselves and make sure that we're on the same trending environment. Okay, yep, nothing different, nothing different. Nothing different. Nothing different. So we could see that even to right here, it's still the same thing off that 23.6. So when you're trading this pair, really and truly, because there's 23.6, I can tell you that trend lines are going to work perfectly on this pair as far as for breakout and continuance goes, because if it's all 23.6, whenever it breaks, it's going to use that area to retest, which I'll do the retest areas in red with this zone. Retest areas wherever it breaks, it's going to use these areas to retest sooner or later, or to come even close to it and continue. Because it moves off of a large volatility of 23.6, drawing your counter trend lines on gold is going to be super golden. It's going to be super trendy. No matter where we go, you can see that the 23.6, dragging it from high point to low point, is definitely going to make sure we do our part. You can see that 23.6 was respected, and boom. Now with gold, because it is a commodity, you got to be careful. Make sure you're using your supply and your demand zones accordingly to make it make sense as far as your structure goes. You can see that anywhere that where we change trends at is where we're going to kind of get a retest at. You can see right around here we change trends, and these are the areas that are going to be super duper important for our retest wherever we transition from, right? Obviously we have a new high, and we're just going to drag our fib all the way up. And you can see essentially everywhere I have a zone, I have a 23.6. That's basically how I trade this pair. I trade this pair in between defined ranges and between support and resistance, right? Obviously, we have a 750 QP somewhere like around right here. QPs do work pretty well on gold. I do get a lot of questions about them, the 750 QP. I do, so since 17 is the base number, I do 17 and then 75, which is somewhere around here. Then 17, let me see, 1780, whatever the case may be. Let me see. I think the next one will be right around right here, which is where we make support again later. You'll see why, right? Obviously, within this defined range, boom, acting as support, acting as support, acting as support. We got a little wick. We move further. You can see the lows. They're now being pushed up. So with 23.6 with this pair, it is different. It's because the retracements are a little bit steeper, for say. But if you're doing it right and you're dragging it piece by piece, even from that higher time frame to that lower time frame, is these 23.6s are going to make you a lot of money. Essentially, all you got to do is buy gold and buy off of 23.6, right? But keep in mind what I told you about these defined areas, and when they break, that's where we're always going to come back to. Peep this one right here. We broke this one. We came back over here. Gold is all about your zone play, all about your zone play, all about your zone play, right? And you can see in this defined area, every time I drag the fib up, Wherever I have a zone, I have a 23.6. You can see that even right here, we got this steep ass pullback. Why? Because of this rigid ass wick right here. But you can see this overall area was used for a pullback. Notice that when I drag my fib even upwards to continue maintaining the trend, boom. Right now, peep this. Right from here to here, obviously, this is our new market structure low right here. I could base an overall move right here, but the reason why I'm not is because if I backtrack overall to our 0%, this pullback didn't even make it nowhere near close. But you can see with gold, you can use fibs, but we've been in such a defined range for so long, since November all the way till now, where it's just been straight bullish, that you got to be careful with this pair, right? Obviously, it's moving off of different momentum, different things. It's not moving off of fibs too much because it's really basing off of 23.6. You can see even where I have these bases of these pullbacks and these drawings, that these pullbacks are accurate, but boom, right? So what does that mean for where we are right now? Let's go back as low as the 1 hour goes, and continue dragging this fib upwards. You can see that right here where we have a defined range, pullback. You can even see right here where we have a defined range, pullback. So what does that mean overall for where we are right now? That this zone right here in this area is a new basis that we could even expect a drop, it's to here or to here, essentially, and we want to just be patient. But I see this pair continuing the long, strong, bullish run that it was on. This shit has been low for so long, but we are making great highs. I overall see this pair either making a pullback down to here or a quick continuation. If you beg to differ with gold, show me your analysis, please. US 30. Ooh. You can see I got a bit of markings on US 30 already, so let me just run through it real quickly. Obviously, we know where we are. We're in an overall uptrend. Boom. The reason being why we're in an overall uptrend, let me base my fib. Let me show you from here to here. Right. Obviously, on this monthly time frame, we see the overall push, right? Not too much data. We see where we are. Going on to the daily, the weekly, we see where we are. Support, resistance, we know where we are. We see the mighty transition in trend, right? We go to this daily time frame though, and this is where it matters. It was this push up that needed to get broken by structure. Hence why I based it from this wick. We did, however, make a retest right here after we broke it, and then a continuation. So that's how I got this. Dragging my fib accordingly. You can see almost came to 38.2. Came above, right around here. Obviously, we do have a wick right here, but nevertheless, it's still respected 38.2 right here. So what this allows me to do is with my fibs, is allows me to weed out a lot of data so I can base it from structural points, which is what I like. You can see that we had a shitload of consolidation right here during the time I know my boy SJ was not trading it as much. I think he was looking at gold. You can see as soon as we broke out of this defined range, we retested it, and then we continued aggressively, right? So what does that mean for me? Obviously, within this defined range from right here to right here, it's some type of market structure point. We can see that 50 was tested a lot, but 38.2 was structure. We can see bada boom, bada bing, and I like actually breaking down this pair just because it's relatively simple. This pair just requires a lot of patience, right? Boom. We can see that with this defined range, somewhere like around here, we came 38.2. 38.2 is a market structure level, hence why I got all the details, all the formalities right here within this defined area. Boom. So what we're going to do next is we're going to delete this. Oops. We are going to delete this. Where is it at? Boom. And now what we're going to do is we're going to measure and gauge from this push up. You can see that this is where we are now, ultimatumly, and we should be waiting for a retest. Where could this retest happen to? Let's go ahead and see throughout the lower time frames based on how structure looks. Well, we already got a retest somewhere around here. We already came back. Looks like we made a nice 38.2 and a large continuation. That's fucking crazy. See that we tested 38.27 on 23.6. Wow. So you can see that momentum is just all freaky on this pair in general, and it's pretty insane. From this 38.2 with a push up and a pull back. We're really worried about this pullback right here, making sure that it stays on 38.2 throughout how we flip these time frames. And yeah, I want to say that this pair is looking fucking amazing for the bull bias completely. Amazing, right? So we made a 38.2, so I can see this shit coming to fucking 27 or negative 68 or 1.8 and then coming back down for a pullback. We did just recently break this minor resistance right around here where we printed above. So I do want to keep an eye out on for that. But from this defined area right here, we did just make a 38.2, which is an area of support. So yeah, I know what that means for me. Fib it out. Boom, boom, boom. So this is where we are kind of structure-wise for me right now. I even can go as back to the 4-hour time frame and see it. It is pretty steep with the movements, which is very aggressive. But what I see as of right now, if we have a 1 hour, is we can either pull back and make another retest right here, or even lower, or we could continue. We are above this zone, which is great for me. And when I look, we do have the 34,250 QP that we did just go ahead and break, which is somewhere around here, which is overall where it was resistance and support. So we could come back as low as right here and go ahead and make that structurized movement, or we could come back as the 134 flat, which is going to be all the way down here. And I don't see it coming all the way back down here, but you know, we got to be open to the possibilities of support and resistance and everything playing its role. So looking at where we are, we have the defined ranges for price. We have where price can fall to based off of lower structure, even in between. Play it safe and trade carefully. Now, UJ, right? Let me go ahead and remove all chart drawings for UJ. Obviously, overall, we're in a huge-ass uptrend, right? But as we go down low, we're going to see some defined data, some defined details. Now, UJ, fucking UJ, fucking UJ, fucking UJ. Since goddamn going into a new year, this shit has just been dropping. Even as low as December, it still was dropping. But now, here's what I feel like. Going on to the daily time frame, we could see the trend, we could see the structure, we could see everything as clear as willy-nilly here, right? Obviously, we're in an overall uptrend, but on these lower time frames, these lower time frame structure is respected so beautifully, right? You could see ping, bong, boom. Now, here's the thing, right? If we are moving back via structure again, I feel like with UJ as zone does need to be retested before we kind of continue, validating that this lower high is valid. Somewhere like around there does need to be retested. When I look at where we are, we're at 127 near the 750 QP, which is somewhere like around there, right? Which is where we are making some type of support, which is good, right? Support is good, but we want to kind of make sure that this support is real and that we're not getting faked out. So what does that mean? It means we're going to drop our support area right around there. We're going to look. So we can see that we tested 50%. We don't see that we have any zones, but if I stretch this zone over here that I drew from body to wick, you can see that we have some type of support, resistance support overall within this defined area. So I'm expecting that a pullback should happen up into this area. Let's go ahead and validate that. We can see that it was this drop that kind of made it kind of go down. But what we want to kind of make sure first is that these lower highs are real, that it has been making. Yep, valid lower highs started from here. About 38.2 back to back. Yep, not bad. 38.2 back to back. So then, bingo. This is where we are, right? So looking at this defined downtrend that we are in, there's obviously going to be some data, some more data from that low to that high point. So what we're going to do is we're going to delete this. My bad. Typos. Boom, right? So now we're going to draw it like that. And now we're going to look from the 7 hour, right? 7 hour should be the same perspective. 3 hour, we're going to see. We had a bit of consolidation because obviously this zone right here was trying to do its part from body to wick. It was trying to hold up as support right here in this overall defined range because you could see that it was trying to break. It had the momentum to break, but it did something similar like what GJ did and just fucking melted. So I'm open to that and I see that, right? Obviously, we're going to go on the 1 hour here. The reason why I said right here, where to start this zone from specifically is because it was this lower high that needed to get broken in order for this price to overall respect, which I'm making green. So I got to stay true to this area and pay attention to it. You see that boom, we came, we consolidated, we did our thing, and we did our drop, right? Now, because it was obviously this is a lower high, we can have some type of a little trend line, I want to say, that can be respected, right? The most important thing that I do want to pay attention to is this area over here. You can see that boom, we came, boom, we pulled back, boom, we came. Consolidation wise, we never broke above here, we fell and dropped, right? Now, from my perspective, I feel like another fib can be drawn from right here to right here. Boom, looking down lower. Just looking at the lower time frame constructs, you can see drop low, retest, drop low, retest, drop low, retest. You can see that all these defined areas that I'm talking about where we're getting these, we're looking for retests, essentially we are getting them. Essentially, but now there's a retest that needs to be happening right around here for us to continue this lower time frame. So because of that, I'm gonna make this zone right here in black, and I'm gonna say that, hey, my buy bias overall is going to be based off of right here. I feel like we should have enough momentum to push up from right here to right here. If you look at this last seller's candle right here, buyers did go ahead and take over via right here. Boom, we made our retest, not as low as this low, but at this point right here, and then we pushed up in this defined area. So the question is why? Obviously, on the lower time frames, buyers' momentum is beginning to come back in the market. You can see the clear trend as low as right here. We pulled back, we shot up, boom, we broke. But the reason why this drop came as low as right here is because we had to come back and retest this other seller's candle, making sure that it was plausible to add momentum to the upside. So now you see it, bing, bang, boom, boom, boom. If you want, let me draw it so it can make as much sense as possible. So now this is what I see. I see, boom, if we break this area, we can then go back to the 30-minute and obviously intel that once we break this zone, we need to break this area right here next. Once we break that area, we can go back to the higher time frame and see that, hey, in this defined area, we should be at a 23.6. So remember I said we can move that fib earlier from right here to right here because it was really this drop that caused us to break right here. So let's go ahead and do that, right? I wanted to make as much sense as possible. You can see that right here, once we break this area right here, we would be breaking at 23.6. By this break right here, you should be able to go ahead and look at the 4-hour and see that buyers would have took over by the 4-hour by this eclipse right here, not only based off of this candle, but by this candle as well, showing you that buyers are coming back into the market for a full trend reversal. Now, we should be able to get past here and here and here and go all the way back up, correcting trend overall. So I feel like momentum did its thing last week. It did cause us to drop, but now let's be patient and wait for the uprise. Hold on 1 second. All right, so that was the Sunday breakdown. A lot of pairs, a lot of details. We broke down GJ, we broke down AU, we broke down gold, we broke down US 30, and we broke down UJ. So if you guys have any questions or any details about that, bada boom, bada bing. With that being said, watch all of this. And if you beg to differ, tweet me. My Twitter is Drewize Banks. At me with your analysis so I can see it, so I can question it, or shoot me a DM on Instagram with your analysis so I can see it. Don't care for it, but I do care for your perspective and your psychology. With that being said, it's your boy Drewize Banks. Nothing but love for y'all. God bless. Deuces, we out of here.